Let's go to the next concept called as base case NPV versus adjusted NPV. Give the heading base case NPV versus adjusted NPV. Shall we start now? Now. One more angle of thinking about project selection and its impact on shareholders' value. But again, this is not very popular, only for academic purpose. Something like APT, we discussed now, arbitrage pricing theory, was academically well acclaimed, but still everybody using only CAPM for share valuation, right or not? Same way, this is academically well accepted, a unique way of thinking about the NPV calculation, but not popularly used through the, say, project evaluation process. Okay, but this is a concept which is very much discussed about. It is called as what? Base case NPV and adjusted NPV. Let us understand what this is. I'll first complete my discussion. More clarity can be got when you do the problems. Problems will be very small because only focus is on the aspects or concept here, not on great computations. Now, we did the last problem, project IRR, equity IRR. You all remember or not? No. In the, if I am right, this is how the project cash flow look like. Year 0, we require an investment of 200 crores. Enna parida? Yes or no? No. And how many years? 15 years. Year 1, 2, 3, up to how many years here? 15 years. It was giving you how many crores? 40 crores, 40 crores, up to how many years? 40 crores. Annuity has been given. Response is on home. Now, this was the project. See, what we say is, this is amount invested by equity and debt. This is amount available to equity and debt. Please discount using what? WACC. What we will be doing is, we will take out KE and then what? KD out of it. What is available is towards the principal recovery. Knock off 200. Surplus is called as what? NPV, which purely belongs to shareholders, and that should be the increase in share price. Up to this, are you following or not? Let clarity now. See, what they say is, discounting all this cash flow using WACC, they dispute it. Okay. You should not discount the cash flow using the weighted average cost of capital is the subject matter of discussion. Why they say that you should not discount using WACC is because discount rate represents risk. We have proved that umpteen number of times in what? Portfolio theory. So the word discount rate is always representing what? Risk. The return you want, depends upon what? The risk of the cash flow, risk you are taking. So the representative of the risk is called as what? Discount rate. Now, when all these cash flows are discounted at a single discount rate called as what? WACC. That means all these cash flows is discounted at KD as well as what? KE. Because inside WACC, KD also there, KE also there. A question is asked, these cash flows increases or decreases? Who is going to bear the risk? Equity only. All this 40 are uncertain. Whether it is sales, whether it is cost, etc. Everything in this 40 is what? Uncertain. If at all you want to have a certain cash flow in this 40, it will be tax shield and interest. Interest is a certain amount and tax rate is what? Certain amount. Apart from that, all the other cash flows are what? Uncertain. Now, I can say this 40 can have two things here. One is, this 40 is having that is amount to be paid to debenture holder, is having what? Amount to be paid to shareholders. Okay. Now, in this case, they say, if I discount the entire 40 using what? The WACC, the amount to be going to shareholders also, I am diluting and discounting at a lower discount rate. Everybody follow what I am saying? It is not that it will be in equal proportion or the cash flows in what? Equal proportion. The cash flows are unique. Predominantly it will be operating cash flow. Only interest portion is less in the total cash flows. I think you are not following or not? Now, they say don't brush all the cash flow with the same risk called as what? WAG. In fact, the entire project risk is going to be borne by what? Shareholders. Now they wanted to segregate cash flows into two types. One is cash flow that is due to project and cash flow is due to what? Financing the project. Everybody yes or no? So they wanted to segregate into two parts, which we did in leasing also. You remember an order like that. Cash flow from investment and cash flow from what? Financing. They want to bifurcate into two. The investment cash flows moves up and down. Yes or no? The moving up and down of investment cash flow is purely the risk of what? Shareholder. Debenture holder will not come to the rescue. Are you following? So what they say is cash flow purely due to the project, you should discount using what? KE. And financing cash flow should be discount using what? KD, because it comes from the debt providers. Everybody following or not? Now, I'll elaborate more here what is going to happen. Okay, now. My problem is, first of all, using a single discount rate, I don't want to brush all the cash flows with what? Same color or same discount rate. I want to differentiate. I first believe that the original project is having a risk to what? Equity shareholder. Original project does not have any risk to debenture holder. Yes or no? Even if I get their money and don't do any projects, then I have to pay what? Interest only. Whenever say NPV project, it is only whose risk? Equity shareholders risk. I should not use KD in any other discounting. Right or not? KD cannot be used directly, nor it should enter through backdoor through what? WAG. I should not have KD itself as what? Discounted. My real discount is what? KE only for the project, because it is the equity shareholders risk. Are you following? By using WAG, I am diluting the risk, or what? I am suppressing the risk is the first argument. Can I proceed now? So what is the way out? Is the next issue. Now. What they do is, first of all, this entire project we assume to be all equity. Assume to be what? All equity. This 200 may have 50 equity, 150 debt. I don't deny it. But what we first do is, we assume that the entire project is what? All equity. Equity is investing 200 and equity is getting what? All this. This is not equity approach. It is what? All equity project. The entire total fund is financed by what? Equity. And for all equity project, find out an NPV. Find out what? NPV. For calculating the NPV for all equity project, the discount rate we use is what? KE. Okay. This project, please discount using what? KE. I'll get an NPV. That is the NPV of an unlevered project. Yes or no? The NPV of what project? Unlevered project or an all equity project, which they call as base case NPV. You call as what? Base case NPV. That is the real NPV the project gives you. So no. Anything more which you get may be due to what? The tax shield on debt, etc., etc. Are you following what I'm saying? So, if it is an all equity comes a project, it gives an NPV. There is a real source NPV given by the project. That NPV will call as what? Base case NPV. Yes or no? To that base case NPV, the NPV is gone from what? Investment. I adjust what? Other financing costs as well as what? Financing benefit. I'll be getting what? The adjusted NPV. Everybody following or not? Now, more about this utility we can understand after they complete the two problems. No time, we can complete the two problems. So now tell me, there are two stages in calculating NPV. First is called as what? Base case NPV, where the project, even though may be financed by equity and debt, will be assumed to be all equity project, and we use what as discount rate? KE as discount rate, and calculate the NPV. Such an NPV called as what? Base case NPV. To the base case NPV, what you should do? Adjust the cash flows arising due to what? Financing. For example, when I borrow money, I'll be having an interest tax shield. Interest tax shield comes from the project, comes from the financing angle. I may have a flotation cost. When I raise equity, I'll be having what? Flotation cost. Flotation cost is nowhere related to what? Project. Only related to what? Way of financing the project. Whatever cash flow comes due to what? Way of financing the project, keep it separately and discount them at what? Appropriate discount rate. And that if you adjust to what? Base case NPV, I'll be getting the adjusted NPV. Everybody following or not? No. It may be little bit vague now. But when you do the problem, I'll tell you once more the discussion and also some conclusions. Can I proceed or not? Now, let's take the question number 16. Let us take question number 16, please. Page number 50, question number 16, capital budgeting chapter. Okay, now. Yes, I'm from workbook. Can I push it above? No. Stop talking. Settle down or not? No. One is an RTP sum, another is an examination sum. Why I am saying? All these are in what? Syllabus and being asked. Okay. We lose sight of all this. Okay. That is what we call full coverage. Yeah? We lose sight of what? All these issues. You only look at the main things. Everything, every aspect of a subject is what? Important. In some examination, it may be what? Asked. It may be your examination also. So no. Whether it is asked rarely or frequently, issue is not there. Whether it is being asked or not. So one is given in RTP, another is given in what? The suggested answers. So this is also an examination area. Can you start or not? Now. I'll do 16 and then come back to 15. ABC Corporation is planning an investment in European country. The local government has offered ABC a subsidized loan of $12 million for a term of 3 years. The loan will carry an interest rate of 3% annually. ABC's current borrowing rate is 8%. The company's marginal tax rate is 30%. ABC will pay interest only during the 3 years and the entire principal is repaid at the end of 3 years. The investment project has a base NPV of negative $6 lakh. Should ABC invest in the project is the issue. Okay. A very simple and small sum only. Go through the problem before I start with the discussion. Once the two sums are over, I'll dictate the notes. I'll have 1 or 2 more extra points also discussed to enlighten about the use of base case and adjusted NPV and then go for the notes. Simply follow the procedure for doing the sum. Please go through the question quickly. Shall we start up? Now, first, we need not calculate base case in PV. They have calculated what? Base case in PV. Tell me what is base case in PV? Minus $6 lakhs. It's a negative NPV project. Understand that? If I finance this project all equity, I don't borrow. I do the project as an all equity project. Tell me, is this project acceptable or not acceptable? Not acceptable. The NPV is what? Minus $6 lakhs. Response is or no? Now, see, company should try to make wealth not only through the investment, they can try to make their wealth also through what? Negotiating on the financing side. Response is or no? Now, base case NPV says really how much the project contributes to the shareholder wealth. Yes or no? What may otherwise be a negative project can even be converted into what? Positive project by having appropriate financing. Respond. Are you following what I am saying? This minus $6 lakhs maybe come by what? A tax shield on debt or other say benefits which can be got from what? Debt on other sources of financing. In such a case, a negative base case NPV can be converted into what? A positive base case NPV, a positive adjusted NPV. Are you following what I am saying? So now we are going to see whether this minus 6 lakhs all equity project can become what? A positive project due to the borrowing, because government is giving what? Subsidized loan. Okay. If I do at a high cost of equity, it may be rejected, but the subsidized loan maybe give me what? Some option to what? Proceed further. So is it possible? Only we are seeing. Can I proceed? Now, first of all, tell me what is the financing cash flow involved here? I am going to have tax shield on interest. I am going to have a tax shield on interest. Okay. Now, you may wonder, sir, interest payment, principal repayment also is what? Financing cash flow. Why we are not considering it? I will give the answer after I complete this particular problem. Can I proceed or not? Now, see, number one. First, we have to calculate the tax shield on interest. How much loan I am borrowing? Tell me. How many loan here? $12 million loan I am borrowing. This I am going to pay immediately after 3 years. After 3 years. But for 3 years, I will be paying what? Interest on that. Can I proceed or not? No. Please participate. Then you can just copy it. Calculation of tax savings on what? Interest pay. Because this is a real amount I am earning from the financing. Yes or no? No. Here, interest, tax savings, present value factor at 3%, because the government is giving the loan at what percent rate? 3% subsidized rate. Other project may have what? How much percent? 8%. But for me it is how much percent? 3%. And then discounted cash inflow. Can I proceed? Now, year one, how much is the loan amount? 120 lakhs. Now 12 million means what? 120 lakhs. You know how much percent interest? 3%. 3.6 million. Yes or no? Now, on this, what is tax? 30, that is 3%. What is 3.6 into 30% gives you what? 1,08,000. Respond yes or no? 3.6 lakhs into 30% gives you 1,08,000. And then the present value factor at 3%, the discounted cash inflow. I think I will able to understand or not? Now, second year also what? Same. 3% I am going to pay interest. I say 1,08,000 tax. Present value factor for second year, discounted inflow. Third year also what? Same. I say I pay what? 3,60,000 interest. Say 1,08,000 tax. PV factor and then discounted cash inflow. If a total 3,05,489 is a benefit or cost or benefit. This benefit comes from project or way of financing the project, way of financing the project. Respond yes or no? Now, here two things. Now, these cash flows comes from equity or debt. It comes from what? Debt. The tax savings does not come from the project. It comes from what? The debt, that way of financing the project. So these cash flows should be discounted at KE or KD. KD. At the point number one. Discounted at what? KD. Now the question is, sir, always you say KD means KD into 1 minus T. Then after tax cost of debt only we should be what? Finding out. Then why you are not multiplying by 1 minus T? You simply discounted at what? 3%. Yes or no? என்ன புரிஞ்சுதா? The tax shield only I am discounting. புரிஞ்சுதா? Are you following what I am saying? Yes or no? That is, I am not discounting an after tax cash flow. I am discounting what? A tax. Yes or no? When I discount the tax, I should not discount at what? After tax interest rate. Respond yes or no? So I am finding out what? Tax shield savings only present value. So don't discount that I into 1 minus T. Discount at what? The interest rate itself. That I into T. The I into what? T. The present value only I am calculating. Everybody yes or no? This is not an after tax cash flow. This is a tax that is being discounted. So don't use after tax discounted. These are the two things because you make a mistake. Are you following us? Now, the third point is, sir, the debt risk is 8%. Why you take what? 3%. For this project, there is a debt provider called as what? Government. Yes or no? He is willing to subsidize how much percent? 3%. His required rate of return how much percent? 3%. This is a unique debt for this project alone, which may be what good for the project. Hence they use only what 3% and not 8% for discounting. Respond yes or no. They don't want 8%, they want only how much percent? 3%. So use 3% for discounting and not what 8%. 8% is given only for misleading you. Everybody following enough. Now 3 points I said. Number one, these cash flows come from project financing. If it comes from project, the risk of the project purely belongs to what? Shareholders. Then it should be discounted what? K. It is not coming from project. The tax saving comes from what? Interest. Interest is coming from what? Debt financing. What is the cost of debt financing? KD. So discount the cash flow using KD. Point number one. Yes or no? Point number two, should I discount using 8% KD and what? 3% KD? For this project, the fund provider requires only how much return? 3%. Government is subsidizing you, so discount at what percent? 3%. The discount at 3% after tax or before tax or before tax? Because what time discounting is what? Tax is that. For that after tax should not be taken. Yes or no? Very simply, I am sitting on a branch and I cannot cut the same branch. I am sitting on a branch here. Branch are not MTH branch and that. In a tree branch, I am sitting in a tree branch and cutting. I can cut another branch. I cannot cut what? Same branch. I am discounting what? Tax cash flow. I cannot take what? After that, because that is what I am getting discounted. Are you understanding what I am saying? So I find it very difficult to convince so many batches. This batch understood or not? No problem. Otherwise, you should discount at what? Before tax. For discounting tax, don't take after tax. After tax, branch is already cut. How can sit on that? Are you following what I am saying? So in that case, it should be discounted at the before tax interest rate. Everybody following or not? Now, this is first. Now, tell me, if I do as an all equity, I get minus 6 lakhs. Yes or no? But due to debt financing, government is giving a benefit of tax saving. You know, all equity, government does not give me what? Tax saving. But this tax saving is given because it is going to have what? Debt. I can consider this or not? Yes, it is also a real outflow from outsider only. In that case, what happens is, base case NPV is 6 lakh and what the tax saving? 3 lakh 5,489. Adjusted NPV is 2 lakh 94,511. Still I will not accept this project in spite of government giving me a subsidized loan and having what? A tax savings benefit. Still I will not be taking it because see, it is giving me a negative NPV. Yes or no? No. I'll tell you advantage of why we should split into two. Base case and what? Adjusted. After I complete the next sum. Everybody following or not? Matter the problem is what? Over. It is one of the RTP sums regarding base case NPV and adjusted NPV. Now, here, let us answer one small question. Sir, we have not discounted interest. We have not discounted what? Principal repayment. All these cash flows, where it has gone? In a question, yes or no? Now, very simple. See, clumsy here, okay? I'll just write once again. Year and then what? Cash flow. How much I invested? 200 crores. On 1 to 15. Simply how many crores here? 40 crores. Now, see. This is having 50 equity, 150 debt. Listen here. 50 equity and what? 150 debt. First, we assume this entire 200 to be what? All equity. That is an assumption. And discount the entire amount using what? K. And found out an NPV. Called as what? Base case NPV. Then we adjusted what? Interest tax shield. Only thing what it is what? Adjusted the interest tax shield because in this 40 crores, I'll be enjoying a tax shield and interest on because when I calculate this 40 crores, interest is not subtracted, tax shield of interest are also what? Not taken. I have not reduced interest and also not enjoyed what? Tax shield. Yes or no? Now, two things has happened here. Not reduce interest, not enjoy what? Tax shield. Answer or not? No. Not enjoy tax shield, I'm enjoying no. Yes or no? I'm enjoying in what? Adjusted NPV, where I took the tax shield separately. It cannot be cut with what? 40. It is an equity shareholders risk. That is having what? The debt risk. Yes or no? In that case, the tax shield has been discounted to what? KD. We consider the tax shield as an inflow while calculating adjusted NPV. Yes or no? The question is, sir, what happened to interest payment? Question arises na? What happens to what? Principal repayment of debt. Because ultimately, NPV belongs to shareholders or not. What happens to interest payment? What happens to what? Principal repayment of debt. No. That is nothing but the interest payment and principal payment, repayment, present value only 150. 200 crores, 150 outflow return or not? What is 150 outflow? It is present value of interest inside this and present value of what? Principal repayment inside this. Yes or no? Already we discussed now. When I discount EMI at what? KD, I'll be getting the loan amount. Now, very simple. I borrowed 50. I borrowed 150. I put what? 50. Invest how much? 200 and calculated NPV. Yes or no? When I calculated NPV, I assume it is what? All equity and calculator. Respond, yes or no? Then they consider what? Financing benefit. In this 40, interest not reduced. In this 40, tax savings and interest not what? Considered. Now, again, from this 40 only, I should pay three things. I should pay what? Dividend. I should pay what? Interest. I should repay what? Principal on debt. Correct? Dividend, interest, principal on debt, and in this I'll be enjoying what? Tax will be enjoyed. Very simple. Tax shield enjoyment separately taken, written in what? Adjusted NPV calculation. Accepted? Right or not? No. The question is the remaining three. What happens to the remaining three? Everybody following or not? No. See, what happens is I discounted using what? KE. The dividend is gone. Right or not? No. So what happened to the interest and principal? Innappa, right or not? No. Equity invested only 50. Yes or no? But I took the investment as 200 or not. In that, the 150 extra outflow taken or not. Why it taken? It is nothing but what? Present value of this interest and principal is what? The loan amount today 150. That is also taken. Yeah, right. Should I repeat that? No. ரொம்ப simple. Now, 40 is used for four things. From this 40 only, dividend goes to shareholder. From this 40 only, interest principal should be repaid to dividend holder. I cannot steal and repay money. Money can be repaid only from the source of the project. Is or not? In this 40 only, tax savings is what? God. Either inflow, remaining three outflow. Accepted that. This inflow I consider that. Adjusted NPV. Correct. And this dividend outflow is taken by discounting using what? KE. And discount of 40 using KE or not. So this is a return expected for a KE risk and discount using what? KE. Dividend matter over. Yes or no? No, one or two things. I and then what? Principal. Accepted that. Sir, why this is not considered? I did not use KD for discounting. Yes or no? Why? What happened to what? Interest payment, principal repayment. Question arises or not? Rumba simple. Yeah? In this 200, really equity money is only how much? 50. We wrote as what? 150. No. By writing 150, this 150 is nothing but what? The loan amount. Is or not? What is this loan amount? Very simple. Is the present value of what? Interest and principal. When I discount the interest principal outflow, I get the present value of how much? 150. That is reduced. That's all. Are you following what I am saying? Issue now. So this is regarding the base case NPV and adjusted NPV. Don't ask the question, sir, what happened to the financing cash flows, interest and then principal repayment. The interest and principal repayment, if I discount them using what? KD. I'll be getting what? The loan amount today itself. It is already there inside what? 200 because equity finance only what? 50. This 150 is financed by what? Debt. That is considered through what? Discounting the principal and interest payment. Is understanding of this. All the four has been taken care. Respond. Are you following or not? Ultimately, I can say like this. 50 invested. Now, 50 invested and these cash flow discount using what? KE. Yes or no? Now, the surplus is the NPV to the shareholder. Respond yes or no? Now, this 150, no need to bring into picture at all because this 150 is nothing but what? Present value of interest and principal. Right or not? Now, so this 150 also is not relevant. Present value of interest and principal also is what? Not relevant. Everybody following what I am saying? Apart from that, one more number is what is the number? Tax shield. This is really enjoyed or not? Now, I cannot ignore in the same way how I ignore what? Interest and principal. The tax shield is what? Discounted separately. I get the adjusted NPV. Pala angular solteya, yes or no? If you are not able to understand, leave it. By heart it. Base case NPV, write the project cash flow as if what? All equity. Find out by discounting using KE. Adjusted NPV, the financing cash flows. What are the financing cash flows? For example, it may be having interest tax savings or flotation costs on debentures or shares. Everything will be called as what? Financing cash flows. If I adjust, I'll be getting the adjusted NPV. Everybody following what I'm saying? With this, we complete this particular discussion. Have you all finished copying? Okay, copy the solution. We'll do the previous sum and then have an elaborate notes regarding the base case and adjusted NPV concept. Please copy this quickly. No? Finish copying, huh? Switch on or switch off, man? Finish copying, huh? Those who have not copied, raise your hand. Can I proceed? No. Silence, please. Those who have not copied, raise your hand. Please, fast. Shall I proceed up? Please. Base case NPV is equal to minus 6 lakhs. Base case NPV is equal to minus 6 lakhs. Tax savings 3,05,489. Tax savings 3,05,489. Adjusted NPV 2,94,511 negative. Negative 2,94,511. 2,94,511. Write down. Project should be rejected as the NPV is negative. Project should be rejected as the NPV is negative. Project should be rejected as the NPV is negative. Shall I proceed or not? Now, let us take the next sum. Once I complete, I will give you the notes for the clarity. Okay, now, take the previous sum, that is question number 15. Take question number 15. Grow more fertilizers is considering, please, a capital project requiring an outlay of 15 million. 15 million means how much lakhs? 150 lakhs. It is expected to generate a net cash inflow of 3.75 million for 6 years. Please. The opportunity cost of capital is 60, how much percent? 18%. It is KE. Okay. Grow more fertilizers can raise term loan of 10 million for the project. The term loan will carry an interest rate of 16% and would be repayable in 5 equal annual installments. First installment falling due at the end of the second year. The balance amount required for the project can be raised by issuing equity. The issue cost is expected to be 8%. The tax rate for the company is 50%. What is the base case NPV? What is the adjusted net present value? That's a question that has been asked. Just go through the question, just understand the facts before you start doing the solution. Go through the question quickly. Finish reading up? Now, tell me, for this project, how much money I require to invest? Year 0 financing, how much lakh? 150 lakhs. Okay, now, is it going to be financed all equity, equity and debt? Really, it is going to be financed by equity and debt. How much is debt giving? 10 million. Means how many lakhs here? 100 lakhs. And how much is equity giving? Balance. I am going to raise to the fresh issue, the public issue of 50 lakh. Up to this, are you following or not? No. Even though 150 is having equity and debt, first I will find out NPV called as what? Base case NPV, assuming that the project is what? All equity finance, to know the real earnings given by the project. Is or not? And then we can adjust what the financing aspect. Respond yes or no. Now, we are going to assume it to be an unlevered project and calculate the NPV, that is called as what? Base case NPV. Can we do it together or not? Write down first. Facts. Write down facts. Fund required is equal to facts. Is that right? Fund required is equal to 150 lakhs. Fund required is equal to 150 lakhs. Branch it into two. Debt equity. Debt equity. What is debt? 100 lakhs. Equity 50 lakhs. Equity 50 lakhs. 100 lakhs put the down and write interest. What is the interest they want? For this 100 lakhs given? 16%. Put a back and write interest 16%. Interest 16%. In the next branch, equity, what is KE? How much percent? 18%. KE 18%. 18%, right about? Huh? 1/8. That's what I said, yeah. What I said? I said 18%, na? Correct, yeah. Why you raise unnecessary doubts? KE 18%. Yes or no? Can I proceed? No doubt, huh? Good morning, friends. KE 18% dictated correctly or not? Now, come to debt once again. Come to debt once again. Write down. Principal repaid. Please. Principal repaid in equal installments. Principal repaid in equal installments after how many years? After first year. Or at the end of second year. At the end of second year. Principal repaid in equal installments from the end of second year. Principal repaid in equal installments from the end of second year for how many years? 5 years. From the end of second year for 5 years. For 5 years. That's all. This is all the facts given. Right or not? Now. And one more thing I forgot. Go to equity, right? Flotation cost. How much percent? 8%. Equity, flotation cost, 8%. The word flotation cost means issue cost. Like merchant bankers fees, the fees to SEBI, bankers to issue, etc. It is called as what? A flotation cost. Can I proceed or not? Next. All facts are over. Can I proceed or not? Step 1. What is step 1? Base case NPV. Step 1. Base case NPV. Step 1. Base case NPV. Underline that. It is a NPV calculated assuming. It is a NPV calculated assuming the project to be. It is a NPV calculated assuming the project to be all equity. It is a NPV calculated assuming the NPV to be all equity. The project to be all equity. Project to be all equity. Okay, accepted. Can I proceed? Now, write down first. Discounted cash inflow, right, as I dictate, discounted cash inflow is equal to, tell me this project gives me how much lakhs? 37.5 lakh every year for how many years? 6 years. It is a 6-year project or not? It is a single cash flow, annuity, a perpetuity, a multiple annuity. Are you discounting using what factor? Annuity factor. Write down. Discounted cash inflow is equal to, please write, discounted cash inflow is equal to 37.5 lakhs into, discounted cash inflow is equal to 37.5 lakhs into annuity factor. Annuity factor, what percentage? 18%, 6 years. Annuity factor 18%, 6 years. Why I discounted 18%? All equity. Okay. 37.5 lakhs into annuity factor 18%, 6 years. Which is equal to, right? 37.5 lakhs into 37.5 lakhs into what is that? 3.4976. 37.5 lakhs into 3.4976 is equal to, I want a number, is equal to, tell me, 131.16 is equal to 131.16 lakhs is equal to 131.16 lakhs. Are you understanding or not? Now, what is 131.16 lakh? Discounted cash inflow. By discounting at equity is required rate of return of 18%. Is or no? Now, next is discounted cash outflow. Discounted cash outflow. How much is the money put into the project? 150 lakhs. Next is discounted cash outflow 150 lakhs. Discounted cash outflow 150 lakhs. Base case NPV is equal to, base case NPV is equal to discounted inflow minus discounted outflow. Base case NPV is equal to discounted inflow minus discounted outflow, which is equal to 131.16 lakhs minus 150 lakh is minus 18.84 lakh. Is minus 18.84 lakhs. Minus 18.84 lakhs. Minus 18.84 lakhs. Answer my question. If in an all equity project, will I accept it or reject it? Reject it. Because it's having a negative net present value. Everybody, are you following or not? No. Base case NPV over. Now I'll just financing effect or not? No. In this problem, tell me, what are the two financing cash flow? One you already know, what are first cash flow? Tax savings on what? Interest. Yes or no? Don't ask me, sir, what happened to interest? What happens to what? Principal. All this is there inside the 150. Yes or no? No. Don't worry about that. The only financing we are seeing is what? Tax savings and interest. One more cash flow is what is that? Flotation cost. Yes or no? And the money I am investing is after flotation cost. Respond yes or no? Now I am also incurring what? Flotation cost or not? Flotation cost is one financing cash flow. And second is what? The tax savings and interest. Innappa, right or not? Now. So now we have to find out those two and adjust against the base case NPV or not. What again is the adjusted NPV. Can I proceed or not? Now. Next step 1 or step 2? Step 2, issue cost or flotation cost. Both are same. Issue cost or flotation cost. Issue cost or flotation cost. How much percentage? We should be very careful in writing the percentage. Now, issue cost of flotation cost. Now, listen here. Let's take a small example. I issue to the shareholder 100 rupees. Understand? In my hand, I'll get 100 or less than 100 less than that. In that 8 rupees goes towards what? Flotation. Only 92 I'll have in my hand. Yes or no? From you I raise. You are all the shareholders. From you I raise how much rupees? 100 rupees. You have given me 100 rupees. Yes or not? But I will get only how much? 92. 8 goes towards what? Flotation cost. Yes or no? Now, tell me. 50 lakhs rupees is the equity money I want. Yes or no? That is the money after paying flotation cost, before paying, after paying. Because after paying flotation cost, still I require what? 50 to finance my project. Yes or no? This before paying, then flotation cost gone, then the amount will be less than that. Are you following what I am saying? Now that 50 is before paying, after paying, this 50 is equal to what? 92. Okay, in that case, what is 8 is the question. How to calculate it? 50 into 8 by 92 will give me the flotation cost. Everybody, yes or no? Don't apply 8% on 50, that is wrong. You should be what? 8 by 92 on 50 will be the flotation cost. Should I repeat once again? Can I proceed? Those who want to repeat, raise your hand. Okay, I'll repeat once again, not an issue. See, forget about this 50. You are the shareholder, I am the company. Who raised the hand? Okay, you are the shareholder, I am the company. Okay, now you gave me 100 rupees as capital. But I took home only how much as capital? 92. 8 went to the banker and all as flotation cost. Accepted that. Now, for my project, I want how much? 50. Because debenture is giving me 100. I want 50 for the asset. Yes or no? Now, the 50 should be before paying flotation, after paying, after paying. I want 50 net for investment. Yes or no? That means this 50 should be after paying flotation cost. There's something equivalent to 92. Yes or no? Then what is flotation cost? There's 8 by 92 into 50 will be giving you the flotation cost. I think I'll be able to understand or not? Now, that's what I calculated here. Right on step 2 is what? Flotation cost. Right? Issue cost is equal to 50 into 8 by 92. Issue cost is equal to 50 lakhs into 8 by 92. Issue cost is equal to 50 lakhs into 8 by 92 is equal to how many lakhs? 4.35 lakh. This is the inflow or outflow of outflow. I write in brackets. It's a cost, na? It is 4.35 lakhs. Issue cost is 4.35 lakhs. Right or not? Now, next, step 3. Can you guess what is step 3? Tax savings on interest. Step 3, tax savings on interest. Now, don't ask why I am not discounting. Why I am not discounting 4.35 lakh? It happens today only. It is always what? Discounted money only. Respond. Are you following what I am saying? So no need to discount the flotation cost because it is happening what? Today, value of 1 rupee today is 1 rupee only. Any discounted may be used. Can I proceed or not? Now, next is step 3. What is step 3? Tax savings on interest. Can we do it together or not? Please open the following columns. Here, second column is what? Interest. Third column, tax savings. Fourth column, present value factor at 16%. I am using before tax, after tax, before tax. Well, what I am discounting is tax only. Yes or no? Now, and discounted cash inflow. Discounted cash inflow. Can you start or not? Now. 1, 2, 3, 4, 5, 6. Here 1, 2, 3, 4, 5 and 6. Enna parayida now? Stop writing, tell and then let us proceed. How much money I borrowed? 100 lakh. I am going to pay in 5 equal installments of 20 lakhs, 20 lakhs, 20, 20, 20. Yes or no? But this principal repayment starts today at the end of second year. That means first year and second year I have to pay interest for the full 100 lakh principal. Yes or no? From third year only the principal starts what? Reducing. I pay on the outstanding principal. Ennappa right or not? Now, first year, second year, interest will be on how much lakh? 100 lakh. Third year on what? 80 lakh. Fourth year, 60 lakh. Fifth year, 40 lakh. Sixth year, 20 lakh. Seventh year, no interest because repaid in what? Sixth year, ennappa right or not? Now, so are you following what I am saying? Now let's start doing the calculation. Interest, 100 lakhs into 16%. 100 lakhs into 16%, 16 lakhs. Now, tell me second year, what the interest? 100 lakhs into 16%, 16 lakhs. Now for 2 full years, I am enjoying the full loan. Kadama? Third year, what is that? 80 lakhs into 16%, 12.8 lakhs. 80 lakhs into 16%, 12.8 lakhs. Next is what? 16 lakhs into 16%. 16 lakhs into 16%, 9.6 lakhs. Next, 40 lakhs into 16%, 6.4 lakhs. 40 lakhs into 16%, 6.4 lakhs. Last, 20 lakhs into 16%, 3.2 lakhs. 20 lakhs into 16%, 3.2 lakhs. Now, on this, how much is income tax given? How much here? 15%. I say 15% tax or not? What tax saving? 8 lakhs. 8 lakhs. 6.4, 4.8, 3.2, 1.6. All are in lakhs. You want to write 8L, 8L, 6.4L and so on. 8 lakh, 6.4, 4.8, 3.2 and then what? 1.6. Can I proceed? Now, PV factor at 16%. 1 divided by 1.16 is equal to what the percent value factor? 0.8621. 0.8621 is equal to 0.7432 is equal to 0.6407 is equal to 0.5523 is equal to 4761 is equal to 0.4104 is equal to 0.4104. 8 into 0.8621, 6,89,680. 6,89,680. 8 lakhs into 0.7432, tell me the number here. 5,94,560. 5,94,560. 6.4 into 0.6407, what's the number? 4,10,048. 4,10,048. 4.8 lakhs into 0.5523. 2,65,104. 265,104. 3.2 lakhs into 0.4761, the number is 1,52,352. 152,352. Last is 1,60,000 into 0.4104 gives you 65,664. 65,664. Now, this is a benefit or cost of benefit. How much government gives me benefit by giving tax shield and interest here? 21,77,408. I wouldn't have got this had I gone for all equity. Yes or no? It is 21,77,408. Accepted or not? No. No. Last step. Step 3 or step 4? Step 4. Adjusted NPV. Don't talk. Step 4. Adjusted NPV. Step 4. Adjusted NPV. Floating cost normally in most, even in bond valuation, amortization, we generally ignore what? The tax benefit. If they give, then we can just take the tax benefit on amortized flotation cost. It is a convention, okay? And understand that some flotation cost can be what? that is capitalized and then written off over the number of years, but we don't normally take it in most of the sums. How leasing, we had one assumption, lessee hands, we are going to have what, no tax sheet, only lessons, like that. Most of the textbook as well as what solution don't consider tax benefit on flotation cost. Both in IPCC as well as what FIANL, same thing had in cost of capital also. Debt amortization, you don't consider what flotation cost. We do not. Here we ignore the tax sheet on flotation cost. That's it. Now, if I do it, I don't say it is wrong, but it won't be matching with the suggestion answer. Really saying, most of the books don't take tax sheet on what flotation cost. Accepted convention. Can I say it should not be questioned? Can I say it? Now, adjusted NPV. Now, base case NPV minus 18.84 lakhs. Accepted or not? Minus 18.84 lakhs. Two more adjustments are required. One is what? Issue expenses. 4.35 lakhs. That is also negative only outflow. 4.35 lakhs. Tax savings on interest. Tax savings on interest. 21.77 inflow, outflow on inflow. If I knock it off, what I get is what? Adjusted NPV minus 1.42 lakhs. Adjusted NPV minus 1.42 lakhs. Minus 1.42 lakhs. Okay, now, computation wise, are you all following or not? No. In this, again I say, dividend is already discounted using KE. Get back. We don't use KD. I accept it. We have to have interest outflow, principal outflow, tax savings on interest. Interest and principal outflow is already there inside what? Loan amount. Tax savings considered separately at the KD discount rate. Issue expense has been considered. All cash flows are considered. This is adjusted NPV. Can I proceed or not? Now, I will tell you what are the advantages of using this approach for capital budgeting instead of using what and weighted average cost of capital approach. Still, it has not gained momentum, but this approach has got some unique or distinct advantages which cannot be there in the normal way of WACC discounting and calculating the net present value. Okay, now, see, when I give a statement like this to the management, project not yet started, I gave you the statement to the management like this, management will have some numbers in hand to make the project happen. Are you following what I am saying? I'll tell you, NPV or the real source, they are able to see where the NPV comes from is properly understood only through what this adjusted NPV statement. I can say like this. From the project, I get minus 18.84 lakh NPV. It's or not? The asset gives me NPV of what? Minus 18.84 lakh. And the borrowing is contributing how much? 21.77 lakhs positively, tax shield, yes or no? And the issue expense constitutes what? 4.35. Negative NPV is how much? Minus 1.42 lakh, yes or no? Then the management says, I want this project to somehow happen. I want the project to what? Somehow happen. What they can do is, they can go to the broker and ask for what? Some discount, try to reduce the issue expense and make it happen, yes or no? Now, they know from which place the NPV comes, they can have strategy to attack all the three. Are you following what I am saying? Now, tax savings, I cannot do anything because it is a government, it's not. But issue expenses and what base case NPV, if due to issue expense only, I say mainly the project is rejected, it's not. Now, if they can negotiate and reduce the issue expense by around 2 lakhs with my merchant banker, or I can cut down what advertisement, or not to go for public issue, raise to what rights issue, somewhere I can find the money by saving the 4.35 lakhs, what otherwise is a rejectable project can be accepted, yes or no? How I will come to know about this here? I'll come to know about this not when I use the original WACC method, only when I use what the adjusted NPV method, because it shows from where the 1.4 to NPV comes. Yes or no? From where it comes here? It comes from project. It comes from what? Issue cost. It also comes from what? Tax savings in it. Independently view and then try to want to find out which is the best way out and then just make a project which otherwise will not happen to what happen. Everybody follow now. Had it done under WAC, what would happen is very simple. Now, we have the 37.5 lakhs. Now, this would have been discounted using WAC. While calculating WAC, I use KD and then what? KE. In the KD, tax sheet would have been considered. While calculating KE, it will be inflated with flotation cost. In a cost and equity, they include what? Flotation cost also, they put into what? The KE. Respond is no. And I consider flotation cost, I consider interest payment, I consider what? Tax shield, everything is considered, but not as a cash flow, but as what? Discounted. If I have a number as discounted, how I can know how I can save the number? Yes or no? It is all are capsuled into what? A WAC. Should I repeat that? Don't try to escape here. Now, ரொம்ப simple now. We don't know base case in PV. We don't know what adjusted NPV. We are a normal citizens knowing only what? Normal NPV. Now, tell me how you will do NPV for this project. Base case, how will you do NPV for this project? I will first calculate what? WAC. First step is calculate what? WAC. What are the columns in WAC? Source, proportion, cost, maintenance cost. What are two sources? Equity, debt. In equity, what is equity cost? 18% plus I have to also take what? The flotation cost. In the paisa no. No. So the K would be calculated including what? Flotation cost. Accept that. And debt cost will be KD means what? Interest percentage into what? 1 minus T. KE over KD over. Yes or no? We have the proportion as what? 150 is to 50, 50 is to 100. Right? The proportion calculate WAC. Then I'll discount this 37.5 using what? WAC. I'll be getting discounted inflow minus what? 150 gives you what? NPV. Matter over. Real follow what I'm saying? Now, this is how we do using what? Normal NPV calculation method. Everybody following now? I'll tell you what are all the problem in this method. First problem is entire 37.5 brushed using a discounted called as WAC. In the 37.5, all the cash flow belong only to what? Shareholder only. His risk is only involved. No risk depends on holder. Even if I don't do the project, anyone is going to pay what? KD. In that case, I should not discount using 37.5 at WAC. I should discount using what? The KE. The real risk part is what? Equity risk only. The discount should be KE. That's the first problem, main problem. Are you following? By using WAC, I am diluting my discount rate. By using WAC, I am diluting what? Discount rate. I should never dilute 37.5 because just because I borrow, the risk is not reducing. In fact, risk will increase. Are you following what I am saying? So, I should never discount the project cash flow, investment cash flow using what? WAC. Is what this method says, because the investment cash flows are what? Risky only, and the risky is whose risk? Shareholders. For shareholders, the discount rate to be used is what? KE only. First, I understand that this 37.5 should not be discounted where? Should be discounted what? KE. That's possible only when I assume as all equity. Is the first advantage of what? Base case NPV. I don't undermine the risk. I don't undermine the discount rate. I discounted what? Proper rate is advantage number one. Accept or not? Okay. Advantage number two is when I calculate WAC, I have considered tax shield. When I calculated WAC, I have calculated flotation cost. Tax shield also considered, flotation also considered while calculating weighted average cost of capital. Yes or no? Did I consider as rupees or percentage? So, when they calculate and percent NPV as normally what we do we know for the NPV how much is due to flotation cost, how much is due to tax savings, can you pinpoint or not? No. It all get merged up, yes or no? It all get mixed up. We are not able to disseminate what is due to project, what is due to debt tax shield, what is due to what the flotation cost. We don't know the breakup from where the NPV comes. We don't know the sources of NPV. Are you following what I'm saying? No. But when I separate them, what happens is, I am able to know in adjusted NPV, I say the NPV of the project is, how many lakhs here? Minus, and that is minus 1.4 1.42 lakh. The NPV part is how much? Minus 1.42 lakh. Somebody asks you, why it is minus 1.42 lakh? Tell me what is due to project, what is due to financing. Now, I'll be able to say here, you will not be able to say using back. There will be grappling, boardless. It is there inside this wax. It is there inside what? Tax shield is inside WAC. Tax shield inside what? Means what is WAC? What is the financial number? Nobody will be able to answer it. Yes or no? But here can say, see, we had a negative NPV because there's an issue expense of what? 4.35. If we can cut down this, we can make the project happen. We can say yes or no. He has a physical number before him to negotiate with the broker to reduce the issue cost here. So no, other way, I will not have this in the normal NPV because everything is generalized, average out into WAC. Are you following what I am saying? All this makes this particular adjusted NPV very superior to what the normal NPV calculation. And one more last thing is, this is very much used. This is very much used in case of mergers, leverage buyouts, etc. The reason is, in WAC, I always assume a constant capital structure. Company is having 3:1 debt equity ratio means that we said no, they should always be having what? Consistent debt equity ratio. They continue to be having what? 3:1 for the future projects also. Right or not? The capital structure is not constant, always keep on changing. It's better to go for what? Yeah? Adjusted NPV method because I don't need to have what? Debt equity ratio for calculating this adjusted NPV. All this make this as a superior technique. Up to this, are you following or not? Now, let's have a small notes in this regard before I proceed further. Now, number one, what is base case NPV? NPV assuming as what? All equity. To that we have to adjust what? Financing item. What are the financing item? Tax shield on interest. Another item is what? The flotation cost, etc. The financing item should be discounted as the financing cost and first at the KE. Write down first. When we use, write down notes. When we use WAC for discounting, when we use WAC for discounting, we discount all the cash flows of the project. We discount all the cash flows of the project using KE and KD. We discount all the cash flows of the project using KE and KD. A WAC inside the KE, KD there is or no? Next, point number 2. However, the cash flows of the project, are purely having equity shareholders risk. However, the cash flows of the project are purely having equity shareholders risk. And the appropriate discount rate should be what? KE. And the appropriate discount rate should be KE. By using WAC, full stop and right, by using WAC, we undermine the risk. By using WAC, we undermine the risk. Point number 2 or 3. First we assume the project to be all equity. And calculate NPV. And calculate the NPV using KE discount rate. and calculate NPV using KE discount rate. This NPV is called what? Base case NPV. This NPV is called base case NPV. Point number 3 or 4? 4. This base case NPV is then adjusted. This base case NPV is then adjusted for financing cash flows. This base case NPV is then adjusted for financing cash flows like what? Tax savings on interest. Financing cash flows like tax savings on interest, flotation costs, etc. Tax savings on interest, flotation costs, etc. The resulting NPV is called adjusted NPV. The resulting NPV is called adjusted NPV. The resulting NPV is called adjusted NPV. Point number 4 or 5? 5. The advantage of this method is that it shows from where the NPV comes. The advantage of this method is that it shows from where the NPV comes. It shows from where the NPV comes. For example, in this problem,